Well, it's time now to take a look at how the markets have been reacting to the latest news out of the United States. Positive gains across the board at the close of play on Wall Street. The Dow and the S&P 500 each up almost 2%. The Nasdaq up almost 2.6%. Now, as for Asia this Friday, it's something of a mixed bag. The Nikkei is up, just over 1%. The Shanghai Composite down almost 0.8%. The Hong Kong Hang Seng down around 1/3%. The Seoul trading around the flat line, as you can see there. Well, for more on what's happening on the international markets, we can cross now to Jamil Ahmad, Director of Investment Strategy at NAGA. Thank you very much indeed for being with us today. How should we understand what we're seeing on the markets today, Jamil?
It's a bizarre example of something that should be very bad with a great deal of uncertainty in some way being digested as good news. And it's very peculiar. Essentially, investors are looking at the increased likelihood of gridlock in the White House and the US political system as impetus that some of Joe Biden's campaign promises, should he actually win this election eventually, such as raising taxes eventually, and also coming down very high in the technology sector, because the Republicans are still likely to have some sort of say in the matter somewhere, whether that's in the Senate or the House, they won't be able to be as aggressive with those policies, and that's also helping investor sentiment somewhat. For example, the Nasdaq, which is full of technology stock, is up nearly 10% this week. It's pretty much unheard of. At the same time, because of all of the uncertainty and some very unusual situations, the US dollar has suffered its worst daily performance since April. It's now down to its lowest level since May 2018, and a weaker dollar is probably contributing to a stronger stock market as well in that sense. But generally speaking, this should have a limited shelf life. We shouldn't be seeing the markets soar like this much further because there's so much uncertainty and nobody really knows what's going to happen.
Now, Jamil, we've just learned that the US Federal Reserve interest rate is holding steady near zero. Is that what we were expecting?
It is exactly what we were expecting, Hexie. We weren't expecting any changes from the Federal Reserve at all. And I think it was kind of a good thing that they didn't comment too much on the election uncertainty, but they were pretty straightforward that they see weaknesses in the US economy. They see causes for concern on rising coronavirus cases. And with the United States just seeing 200,000 new cases across 2 days, actually slightly more than that level, it seems to be a matter of time before the Federal Reserve are going to put the pressure on the US government to announce a fiscal stimulus package that should help provide the economy with some support. And it just hope that despite all of this election uncertainty, that long-awaited second round of fiscal stimulus can be approved between the House and the current sitting president, because that's something the market's been waiting for now for at least 4 to 6 weeks.
And Jamil, what else should we be looking out for this Friday? We are, of course, expecting the latest US employment report to come out.
That's exactly right. So we've got the monthly US employment report that basically shows how many jobs the United States economy created over the previous month. So that would be in October. Now, essentially, the biggest challenge really facing whoever wins the 2020 presidential elections is trying to restore the jobs recovery in the United States, because we've seen this momentum wane over the past couple of weeks and months. And we saw only 350,000 jobs were created by the private sector in the preliminary report. And there's expectations that it will be about 500,000 jobs created this month, which goes to show the extent of the challenges that whoever does win when everything's said and done, it's going to face a big challenge, because the US economy has only recovered half of the number of jobs it lost due to the pandemic, which is over 20 million. And yet the momentum of the job recovery is slowing. So it's going to be a difficult task no matter who wins.
Jamil Ahmad with a look through the markets. Thank you very much indeed.